So financial statements. So you want to. So there's on the actual financial statement itself, it has a checklist of things that you need to have, and we'll take a look at that in a moment when we go to the next one. Okay. And then so all these points here: the bank reconciliation, monthly financial reconciliation. So let's just take one step at a time, I guess. And so on the document checklist, it's really important that if you have any receipts that you've submitted, and that's kind of the check off, right? Your monthly statement needs to be included as well. So then, and these are photocopies, by the way. You don't send the originals. Yeah. Yes. Very important. Not.
You always keep the originals.
Always keep the originals. When it comes to receipts for if you have food allowance, for example, or you have a live-in attendant, you don't have to send in food receipts.
Okay.
That's the only receipts you don't have to have. But it is a good idea. I always recommend that people keep track of it a little bit and keep a little separate envelope for that, because then you just, if somebody asks, you have that information. So, and if you get audited one day and stuff, sometimes that information is necessary as well. So to have that in place, when we're talking about bank reconciliation, that word reconciliation means just that there's a section on the bank on your statement, financial statement, that shows any checks that haven't gone through yet. Yes. So, Fernando, I might have paid you, and you, for some reason, don't need money. And, and so maybe Fernando hasn't cashed his check yet. Right. So that needs to be noted on the statement, because it will show up as having more money in your account than you actually really do. Because if I paid you $1,000, in your wages, but you didn't catch it, it won't reconcile. Basically.
Yeah, right. Things don't balance at the end of the month.
Exactly.
So what do you do in that sort of scenario?
You give a little poke to Fernando and say, hey, I haven't catch your check. Right. But at the end of the day, it's not a problem. It is in that eventually you wonder if they lost their check, right? As they've forgotten about it, things like that happen, depending on the situation. Okay, and then we talk about the responsibility of getting the statement in. You have 45 days to do that.
45 days after the end of the month? Or?
So exactly. So if we're talking about January statement, it needs to be in by March 15th.
Gotcha.
Okay.
Yeah, exactly. So you have lots of time.
So you've got 45 days. Right. And the reason why they give you that much time is that you need to make sure that you get your bank statement back and stuff, right? One of the things that we didn't talk about when we were talking about the bank is it's really also important to get your images of your checks back as well. So, right, because
there's a charge on that now.
And there is a charge, and it's some is $2, some is $3. You can put that through your CECL funds because you just pay for it, right? And it's automatically charged on. The banks have easy ways to charge for those statements, so no problem. And that's the case for all service fees and stuff. That's the CECL program.
Every time I go into my account, I want to view a check and I'll pay for each individual amount.
Right.
So I don't do it.
Right.
So I have no idea what I'm paying for.
Right. Now
And Pam said he doesn't charge?
No.
Yeah, I know. I need to do a switch.
And we've had some discussions about, to really look at the different institutions, because Ben City, Susan's bringing that up here, and they have a great program for people with disabilities, and we've talked about that in the past as well, which is very good. Then there's the surplus funds. Really important, to keep an eye on your surplus funds. It's very important, as we've discussed in the past, to have extra funds available for emergencies. Things like, if you need more support in a week than normal because you're sick, You know, that you're not in a real position to contact the case manager to ask for some additional hours. Doesn't mean you can't, but the idea here is that you actually have enough dollars to be able to deal with that. As well as if you need to let an employee go, you'll have to pay severance pay, those kinds of things. So the surplus funds is that you're allowed to keep up to 1 month of funding. So if your funding is $8,000 a month, you're allowed to keep an additional $8,000 a month. Generally, our recommendation is around half of that, so it would be around $4,000. So half of your allocated amount, because then you can pay up to a 2-week severance pay if necessary to do that. You know,
question around the opposite of a surplus, deficit, right? So is there ever an occasion where it's okay to say use up more than you have within 1 month, but balance it out with the following month? Let's say, for example, if you're going away, going away for 2 weeks.
Yeah.
You're going to visit family, and you're not going to be using that portion, and you don't want to use it or put it into a surplus because you've already maximized your surplus, right? So how does that scenario work? Is it possible?
So ultimately, on the CECL program, you're not to go in a negative. So you're allowed to keep a positive amount in your account, but you're not to have a negative. You run the risk of going against your contract. Because your contract is very clear that that you're not to go into a negative position. Dipping a couple $100 or something like that is not going to be a problem in regards to making that up in the next month. But if you're going thousands of dollars into the hole, most likely you're not getting enough home support hours. The example you provided is a bit different, but then you need to do some pre-planning before you go on holidays. And you have to make sure that the funding is in your account if you're going to need to pay more for going away, or you're going to need more, or you know that you're coming out of the hospital and going to need a bunch of hours and stuff. Right. Having said that, being hospitalized and you know that you're going to need more support, this is a good example of going back to your case manager, right? And you should go back to your case manager because that will need significant hours, right? But that was a really good, important question. And so we're going to look at the financial statement and kind of look at what we've just discussed, basically.
So the next one we're just going to look at as a bit of an example. So bear with me here. This is the filled in one, right, Paul?
Yeah.
This one?
Yep.
Bigger. 1 second, let's get on the infinity here. Try it from this one. Try to grab that little corner. There we go. Oh yeah, we're still doing that. Great. So what I will do, once again, for those of you that are online, you can view this as a full screen also. Okay, so let me make it a little bigger for us here.
Great. So, what's really great about seeing this, and we just kind of mocked this one up a little bit, right? So, this person, let's take a look right here. This is while you're here before you make it smaller. This is the checklist that we were referring to, and have you attached the following? So there's the copy of the bank statement, and so any other expenses that you have, like Revenue Canada, right? Is a good example. WorkSafe PC, that's an old form, it looks like, WCB.
Yes.
And again, the original receipt. So this is kind of your checklist. And then as we look on the left side, this is the whole reconciliations component that we talked about, right? So you take the money that's already in your bank account, right, and you're moving it over basically, right? And then you got funding received from the health authority, which in this case, this person's getting $5,310. And a little bit lower, you'll see that if there's other funding that is coming in. So I think that the under VCHA, then that's interest, right? So if you're in a bank account that has a small interest rate, right? Sometimes you'll find that's only like 10 cents or something like that, right, guys? Yeah. Not very much interest these days. And then the third one is the client contribution. And we're going to look in the slide in a few minutes around a little bit of calculation on client contribution. But Client contribution, just in short, is the amount of money that you may be having to pay into your home support. So, so in this particular example, the person doesn't have a client contribution, but if they did, and let's say it's the maximum because the person's working at $300 a month, then you would see the Vancouver Coastal Health would not show 5,310; it would only show 5,010, right? Mm-hmm. And then you would add the contribution of 300, which would be the allotted hours that you would have been assessed for, right? In this particular case. On the left here is other expenses, basically, that has been distributed. So the net wages. So that's just the full amount of the wages of all your employees.
3,400.
Exactly. You know, any vacation pay that it was distributed. WorkSafe BC, if you provided them their check. Revenue Canada, you know, in this case, they paid $782. Exactly. You know, that always drives me crazy when I have to give out that money.
We all have to do it.
It's like taking from. It's kind of funny from taking one from one government funding to another government funding. But anyways, don't get me started on that. Other benefits would be things like a medical dental plan, perhaps.
Oh, I see.
That maybe you're paying for. So, we at the Individualized Funding Resource Center have now been able to tap into a really good medical dental plan at a reasonable rate. So if there's people out there that are interested in a medical dental plan, even long-term disability, these are all the kinds of, and then life insurance, those kinds of things. We have a really good plan that we can all tap into. I should be really clear, though, when I mentioned long-term disability and I mentioned life insurance, those are not covered through the CECL funds. I should mention that. So what can be long-term disability cannot be covered through the CECL funds, and neither can life insurance. Okay, but you could, the medical and dental can be covered through your CECL funds. So let me just go back then and look at the top. So, for example, you know, in that package with life insurance, for example,
yes,
in our plan that we've got, we can provide $25,000 life insurance, for $5 for our employees. So if our employees are interested in that, they could give us the $5, and we can put that then into where it says other, right? So, so maybe Billy decided to get the life insurance and long-term disability,
where it says funds received.
Exactly.
You would put the $5.
Exactly.
Okay.
Or maybe you feel that you can't really afford the full medical dental plan, and you'll do a 50-50 split between the employee and the employer. That amount that the employee gives you can be put here as well.
I see. Okay.
As added in. So that way you can still pay Blue Cross or whatever it is with one check. So that the client doesn't go paying half and then you go paying half. First of all, they don't let you do that, for one.
Right.
So the CECL program allows you to make the payment on behalf of the employee. But you need to then be clear about it on this form so that everyone's clear.
Okay.
Going down on the left, payroll bookkeeping, any advertising, bank charges, and then any other items. What was that?
Is that recruitment facilitation?
Recruitment facilitation. So we're Individualized Funding Resource Center does recruitment facilitation for $200 a month, for example. And you know that service will be helping someone find you staff, be able to help you on the whim, right, in regards to dealing with some of those issues. So, hang on. So on the left side, then,
I'll just make it a little bit bigger.
Great, thank you very much. My eyesight. And then on the left, basically, we the cash balance, basically, is you're adding up the ABC, basically. So if you go up a little bit, there should be an ABC. Anyways, it will add up the A, B, and C section to determine what your cash should be on hand. Okay, where the A must be the 5,310. Sorry, that's not. Where is it?
It's got a.
Oh, A is the cash balance from last month.
Oh, which is on the other side.
It's on the very top. There, for some reason, the
A is not meant. Yeah, right there.
The A is not there for some reason. But A, B, and D equals D, which is the cash balance. So let's go down a little bit more. And so basically, this area, and again, I should say that I am not an accountant, and I'm somebody who pays somebody to do my payroll for me. It is just a headache in my case. Those that are good with numbers, fantastic. For me, not the case. But anyway, so this would determine what your surplus funds are. And in this particular case, this person has $1,550 in surplus funds. If we look on the right side now, so here are the funding that's come in. Go down a little bit. Less the outstanding checks. So these means are checks that just haven't been cashed yet. Gotcha. Right? And in this case, Kimberly hasn't cashed her checks, and Receiver General hasn't cashed their checks. Shockingly, they usually grab those pretty darn quick.
An example.
Yeah, that's an example. That's right.
So then we're ending up with that surplus.
So that surplus was in the bottom left, but
that's 1,700 then.
Is the equal cash balance. So that's the amount that might be in the bank account.
Okay.
But again, this is kind of an overview. The actual CECL package that you receive also provides you a breakdown of how this works.
Right.
And in our manual, we give even more detail on how to do it as well. I would like to mention here that it's really important that you're responsible to sign this at the bottom.
Yep.
So even if you have a payroll person doing this, it is your responsibility to know that this is correct. Gotcha. So that doesn't mean you just I mean, obviously, if you're dealing with a payroll person that's been doing the CECL program for years and years and years, you might trust that. But at the same time, errors happen, and it's your responsibility to double check. They're the ones that aren't going to get in trouble with you. So make sure you do keep an eye on things. Make sure everything's okay. So that's the financial statement, and the crash financial statement, of course.
Give me 1 second here. I'll move this out of the way. Okay, so dealing with money is never easy.
No, it's not, right?
A little bit. So I'm just going to get rid of this here. Bear with me 1 second. Okay, so
we're moving on to the next.
I think so.
So the next one is talking about the client contribution. We were talking earlier.
Oh, no, sorry. I think I jumped ahead.
No, I think you're. Oh, yeah. Yeah. So the client contribution component is really an important thing to know. And so if you're making, so first of all, it is not easy to determine what exactly the per diem rate is going to be per day. And we're at the Individualized Funding Resource Center, we're actually looking at coming up with a spreadsheet. And unfortunately, I wasn't able to get that together today, Fernando. But we actually want to come up with a spreadsheet, and perhaps on our next session, I might be able to have it, where you can actually just type in the numbers of how much your net income is, and it will pump out a number. Right. Because you actually have to, as you can see, the daily charge is calculated at 0.13, blah, 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 blah. But it's also based on dividing it by 780 some on and those kinds of things. So, ultimately, what I'm trying to say is that if you're not earning income, there's no earned income, and you have an income coming in from an ICBC settlement or from another kind of structured settlement, you will be paying a certain amount towards your home support. That's right. And there will be no cap on that unless you have earned income. So when we're talking about earned income, we're talking about monies that may be coming in from employment. So let's go to the next one. So the client is not required to pay more than $300 for home support service in a month if a client or client spouse, that's really important, or client spouse
Okay.
receives earned income.
Right. So if you or your spouse, either you or your spouse work,
Exactly.
the maximum,
They can charge
They can
is
charge
$300 a month.
right? Because we're using the word client up there, and a lot of times when we're talking about Cecil, we're calling people the employer.
Employee, right.
There's two different terms
Good
for
point.
you.
Right, and this is just coming directly off of the Ministry of Health's website.
Right.
Right. So, it's a big relief though for people to know that there is. It was a group of people with disabilities that work hard with the BC Coalition of People with Disabilities to get that $300 cap.
Mm-hmm.
Because people were paying $1,000 for their home support a month or more, and it's just a lot of money, and it was a real disincentive to employment, right?
Absolutely. Oh yeah, definitely.
So then, looking over the next couple of points here, if the client or employer receives any, sorry about that, I usually shut that off, receive any of the following dollars, then they are exempt from a per diem. So if you look here, so if somebody is getting old age security,
Is it actually called old age security?
I think it is. Yeah. Old age security, yeah. And so if you're getting that, you're not having to pay the client contribution. If you're receiving income assistance under the Employment Assistance Act, you also do not. So I want to point this one out a little extra because there are some people that are concerned about making the $800 a month.
Yes. Right.
And this makes it very clear that if you're just kind of getting started, you want to get your feet wet, and you want to just work for around the $800 a month, you will not have to start paying into your home support up to that $800. As long as, actually even greater than $800, as long as you are still receiving your disability check, right, then you do not have to pay into home support. So that means you can receive your disability allowance,
Right.
and then you can also receive your $800. And then if you make $200 above the $800, right, then they reduce a certain amount off your disability. Yes. But you're still not having to pay your home support funds because you're still receiving some of it. Right. So keep that in mind, okay?
Okay, so question, income assistance. If you are receiving income assistance, and say your partner is working,
yes,
you still have to pay. But there you have for the client's spouse.
So if the client spouse, yes, you will have to, if your spouse is working, then you'll have to pay. Well, no, sorry, let me just think about that for a moment. That's a great question, Fernando. And actually, I'll have to inquire about that, Fernando, just to make sure. Because it is our understanding that if you're on employment and assistance for people with disabilities, then you are not having to pay the client contribution. But I don't know how clearly that defines if your spouse is working. So we'll inquire about that, okay? And I have a Greg here that works in our office, and he's keeping good notes for me to make sure that we're going to follow up with that. Because Greg knows the answer to that because we were working on it the other day.
No, I don't actually.
Okay,
Good question, though. Yeah.
Okay, great. Thanks.